All right, let's dive right in. Today we're breaking down Deckers Outdoor Corporation. You know them by the ticker symbol DECK. Now this stock has taken an absolute beating. So the big question is this a falling knife you don't want to touch? Or is it a golden opportunity in disguise? Let's figure it out.
So first up, this is the number that just grabs you, a 61% drop from its all-time high. I mean, wow, that's not just a little pullback, that's a serious plunge that has erased a huge chunk of market value.
And a drop that big forces us to ask the really important question, right? Is Deckers a company that's just spiraling out of control, or is this more like a coiled spring, just getting loaded up with tension before it bounces back hard? So, to figure that out, we've got to play detective and look at the clues. And this analysis points to 4 pretty distinct types of bullish signals that suggest, this might be more of an opportunity than a crisis.
So we're going to look at this from 4 different angles to build a case. We'll start with the company's actual value. Then we'll see what the charts are telling us. We'll check in on what the Wall Street pros are thinking, and maybe most importantly, we'll see what the insiders, the people running the company, are doing with their own money.
Okay, first, let's talk about value. Like, what are you actually paying for? The price-to-earnings ratio tells us that. For DEX, it's just under 13, but look at the average for its competitors. It's 29. That's a massive discount. It's basically like the stock is on sale for less than half price compared to its peers, which is a huge signal that it might be seriously undervalued.
All right, moving on to the technical side of things, we need to quickly talk about something called the RSI, or Relative Strength Index. The easiest way to think about it is like a speedometer for the stock's momentum. And when that speedometer drops below 30, it's a big red flag that says, hey, this thing might be oversold. The selling might have been a bit too much.
And boom, here's why that matters. DEX RSI is sitting at 2811. That's deep in that oversold territory we just talked about. For traders, that is a flashing light, a loud signal that the sell-off has probably gone too far, too fast, and that a rebound could be just around the corner.
It's not just the charts and numbers screaming opportunity. The people who get paid to analyze this stock for a living, they're on board too. We're seeing a really strong consensus here. 19 Wall Street analysts are calling it a buy. And they're not just being vague. Their average price target suggests a potential upside of over 42%. That's conviction.
And this is a big one. It's what we call skin in the game, insider buying. The executives, the folks who know the business inside and out, are actually using their own cash to buy shares of the company. That's about the most powerful signal you can get that they think the stock is a flat-out bargain right now.
Okay, so we've got all these green flags waving. Valuation, technicals, analysts, insiders, they're all pointing in the same direction. So what's the move? Well, this analysis is great because it doesn't just say buy it. Instead, it lays out 4 distinct playbooks, each one designed for a different type of investor.
So first, think about what kind of investor you are. Are you the type who plays it safe, who puts safety first? That's the cautious planner. Or are you looking for that perfect sweet spot between risk and reward? That would be the balanced strategist. And then again, maybe you're a bit more aggressive. You're the growth seeker, willing to wait for that momentum to really kick in. Or maybe, after seeing all this evidence, you're the decisive actor, ready to jump on these strong signals right away. There's a plan for you too. And here's where it all comes together. This table is basically your GPS for this trade. It takes those 4 investor types and turns them into concrete plans. You've got specific price ranges for buying in, you've got your safety net, the stop-loss levels to get you out if things go south, and you have clear targets for where to take your profits. It's the whole shebang.
All right, but let's pump the brakes for a second. It can't all be sunshine and rainbows, right? Every smart investment means looking at the upside, but also being brutally honest about the risks. So what could derail this whole thing?
So there are 4 big things to keep on your radar. First, tariffs could make consumers nervous and cause them to spend less. Second, this is not a sleepy stock, it's volatile, so you have to be ready for some big price swings. Third, if the whole economy takes a hit, the entire retail sector could suffer. And finally, for a real recovery, we need to see a surge in trading volume. That's the proof that the big institutional money is buying in.
So you weigh the good, you weigh the bad. What's the bottom line? After looking at all the bullish signals and staring the risks right in the face, what's the final call here?
Well, the final verdict is that DEC is looking like a really compelling setup from a risk-to-reward perspective. And the analysis gets specific, singling out the moderate approach as the best way to play it. It's the one that seems to offer the best shot at a winning trade while still keeping a tight lid on the potential downside.
So what does that moderate approach actually look like? Well, it's not about just jumping in with both feet. It's a disciplined, step-by-step strategy. You start with an initial position, you have a plan to add more if the price drops a bit, you keep some cash on the side, you have a hard and fast exit point if you're wrong, and you have crystal clear targets for cashing in your profits.
And that really brings us to the most important question of all, doesn't it? When you see an opportunity like this, where all the data is pointing one way, what's the difference between just gambling and taking a smart, calculated risk? Well, as we've seen today, the difference is having a plan, a clear, data-driven plan with defined entries, exits, and risk controls. That's how you turn a possibility into a strategy.